fundamentals and, of course, in the strategy going forward. Yogesh, great to have you on the show. Thank you so much for joining in. So the market's running into a very newsy phase right now, and it's doing that at elevated levels. First of all, let's get your overall sense. I mean, are you constructive at these levels, and what have you made of this volatility that January has brought with it?
No, obviously, first of all, thanks for having me on the show. Look, we are generally long-term constructive on the market. Uh, uh, we see a consistent earnings trajectory from here on for the next 2-3 years. And more importantly, unlike the past, where we always had few sectors or few stocks in Nifty, which would lead to a significant earnings downward revision, we don't see that happening over the next couple of years. So yes, there is volatility, and to be honest, some volatility is always good. But in general, we remain very constructive on the market. Obviously, there are some technical factors as well in terms of all the SIPs and the fund flows, domestic, FIIs, the global allocations. Those always play in favor of India. But I think longer term, we are seeing a good earnings trajectory, and that keeps us positive.
Yogesh, morning. Reema here. So what would be the big bets that you're taking at HSBC for, say, the next 3 years?
Thanks, Reema. Look, we are not going sector specific, but we have a number of stocks. We are looking at bottom-up views on every stock. And so there are stocks in most of the sectors we have allocation. But in general, we are cautious on staples. We believe the past 10 years of re-rating and the consistent margin expansion is unlikely to continue. So we expect consistent de-rating over the next few years on staples. And we are constructive on discretionary spend. We are relatively cautious on IT, and we are constructive on some of the larger banks and parts of the public sector banks as well. So it's very bottom-up approach in terms of stock-specific allocations. But yeah, on a sector-wise basis, as I mentioned, there are few sectors we are cautious, specifically staples and partly IT. But rest of the sectors, we are positive.
Okay. So can you elaborate on that, Yogesh? Which would be your biggest overweights at this point in time, and why?
So without going into stocks, from a sector specific, we are overweight on autos. We are overweight on consumer discretionary in general, and we are also overweight on some of the private banks. And I forgot to mention real estate.
You mentioned private banks, Yogesh, so I have to ask you this, right? Because that is the hottest debate in the market right now, whether there'll be more margin pressure ahead, this whole fight to mobilize more deposits, the RBI keeping a hawk eye with respect to unsecured lending, so on and so forth. So what have you made of the weakness from a lot of the major names? Obviously, HDFC Bank, I know you can't talk stock specific, but in general, it's been a disappointing start to the year for private banks.
It's funny because some of these issues which we saw during these results were well known. Okay, you talked about HDFC Bank as well. I think some of these names pressures were all well known, but there is, typically for us, there's always a hope something will happen and take care of it. And it didn't happen this time, which led to this correction. But I also feel the market in general is quite, to be fair, not very kind on banks. I mean, look at the valuations. Usually for every other sector, we are giving 2 to 3 to even 4 times PEG ratio. I mean, you just had Marico on your channel, and look at the growth we are seeing in some of the other sectors, especially even staples. Whereas with banks, we are still looking at a PEG ratio of at least not more than 1x. So I think, yes, there are pressures in the short term related to names. And also, to be honest, some of the personal loans and credit cards, some of these areas are seeing credit pressures as well. But there is no reason for earnings to not compound mid to low teens or even high teens. And therefore, if somebody takes a 2-year view, at least that compounding should happen, which effectively would mean they will be outperforming the market.
Well put. Thank you, Yogesh, for joining in. We need to slip into a very short break, and ahead of the interim budget 2024, we'll get you details on all the big numbers expected this time. Stay tuned.